Four Corners podcast.
China didn't exist in any meaningful way before 2002. China has earned in excess of $5 trillion of trade surpluses. We are seeing the last hurrah of the US dollar as the monopoly global currency. At some point, the Hong Kong Monetary Authority will have to break the peg with the US dollar. There is nothing fundamental about Bitcoin. We valued Bitcoin in 2016-17 at about $200. I would not revise that. It will one day be in a book about bubbles from Mario Draghi. I think he controlled the ECB at a very difficult time. Italy is lucky to have him as Prime Minister. I have no respect for his successor. I think the Guard is unfit for its demanding purpose.
Hello and welcome everybody to the Four Corners podcast with your host Klisman Murati. We have a very interesting guest today. His name is Savvas Savouri. He is the chief economist of Tosca Fund Asset Management, a fund that manages over £4 billion under management, so a pretty big number. And Sav has been in the industry for a long time, and he has some very interesting views on some very interesting topics that we'll be discussing today, including the rise of China, the decline of the US dollar, and the identity crisis of the Eurozone. So the first question I have for you, Sav, is what is your perspective on the psychology of chief investment officers and of the finance community in general? Because it seems to me as if a lot of the time when I hear perspectives on the news and in the papers, they seem very status quo. There doesn't seem to be a lot of unique analysis on different topics, especially more complex topics which are more far away, such as China, their ambitions and their operations, and even things which are more close to home. How would you describe this sense of status quo mentality in the finance world, and what gives an investor or a chief investment officer or a chief economist the edge when it comes time to understanding world affairs?
Well, let's go from description to quantifiable numbers. This is my 30th year, 30, working in commercial finance. Of that 30-year period, I've spent half the time on the sell side, working for investment banks, the Dutch, the Germans, the French, the Americans. The other half I've spent working on the buy side. 13 years now at Tosca Fund, where I work in many ways with my friends, the colleagues and friends. The word that really captures your question really is consensus. It's very cozy to be part of the consensus, not to break away and say, I'm going to talk about something that isn't groupthink, because we are risk averse in our careers. And we don't want to say anything that is controversial. Even if we believe that the consensus is wrong, we are fearful of stepping away from it. And that is, in terms of economics, if you're a student of economics, you recognize that as a stubborn disequilibrium. So even though the correct answer is somewhere here, the market will stubbornly believe in this, because nobody wants to be the first to move away because they may be wrong. And then all of a sudden, something happens, a crack happens, and everyone moves to the right position in a stampede. And everyone can claim that it was a market shock. And that is incredibly frustrating. So let's think about 2008. 2008 wasn't sudden or shocking. You could see the GFC happening in slow motion, but nobody wanted to talk about it because there was also another thing that really creates this stubborn disequilibrium, which is effectively self-interest. If you're thinking about the period from 2002, 3 to 4 to 5 to 6, the big investment banks, the big rating agencies, they didn't want to talk about the fundamental weakness of mortgage-backed securities or CDOs or CDSs. They didn't want to talk about the problem with the pigs of the Eurozone, because they were making fees. And nobody wants to basically kill the golden goose. Now, if you can see this thing happening and you're the lone voice, you're the maverick. So when 2008 struck and we had the collapse of the subprime mortgage market, we saw the collapse of Lehman and Bear Stearns, and we saw the collapse of Washington Mutual and so on. That wasn't something that you couldn't predict. It was because there was so much of a vested interest echo chamber. The journalism that we have today, when I began in finance 30 years ago, you didn't have rolling news. You didn't have CNBC or Bloomberg. Bloomberg didn't
Sure.
exist in
Yeah.
91. Microsoft didn't actually exist as a working tool on your desk. You turn your machine on in 91 and you had a black screen. If you wanted to write code, you wrote it from a base language, which meant you had to understand what you were doing. Now you simply press a button and you get anything you want from Bloomberg.
Yeah.
Diagnostics. So what you have is effectively amateurs operating heavy machinery. That's dangerous. The reason I began 30 years ago in this industry was simple enough. I had no ambition to work in commercial finance. I was loving studying econometrics and mathematical economics. I was loving teaching it, and I was teaching forecasting at a university. And one of my students asked me where I'd practiced what I was preaching. And rather embarrassingly, I said, nowhere. I've never actually taken this into practical territory. And I realized that the respect that my students had developed for me over the course of the semester, the term, vaporized. So I promised myself I'd leave academia for 2-3 years, spend a few years working for an investment bank, and then return. That was 30 years ago.
And you never
Because
turn
once
back
you
from
get
then.
in this industry, it's infectious.
Yeah, I can imagine. For sure, because I think it forces you to use all parts of your brain to see how things are connected and how things can develop. And it really needs someone who has the stamina to do that over a long period of time. Do you think, though, those who get into the industry at the beginning, especially students who may be dazzled by the glitz and glam of the big investment banks and who recruit them to come on board, very quickly, a lot of the times some of them at least get disenfranchised because they weren't expecting it to be as high pressured and as cutthroat as it is. From the time you started to now, what do you think? Do you see any trends in the best time to get into the investment world? Do you think you need some experience in life, in a fundamental business, to really truly understand the impacts of finance and the impacts of trade onto a specific sector, as opposed to coming in straight as a student, a baby-faced fresh student with only theory in your mind without any real practice of the real world?
No, let's think about this in practical clinical terms. You speak about students coming into the industry. How on earth can someone who studied modern languages or history or something even as seemingly appropriate as engineering or physics come into an industry which effectively requires disciplines and knowledge beyond modern languages? What I've found, if anything, in 30 years, is a number of recruits who have studied to a master's economics is dwindling. There's a fashion now to recruit financial engineers because of the quants and big data and algorithms. This is not NASA. This is not a subject which is about physics and laboratories, and it's not a clinic. You have to be as good a macroeconomist, labor economist, monetary economist, psychologist, behavioral psychologist. So many of the entrants don't have the key disciplines educationally that are needed in this industry. Imagine if medicine, just for a second, draw a parallel between finance and medicine.
Yeah.
Would you allow yourself to be operated upon by a surgeon who's never studied biology?
Definitely not.
Of course not. And yet we have that. And you might say, well, surely you can learn on the job. Would you want to be operated upon by somebody who just walked into a hospital and spent 3 years watching a surgeon? Of course not. You want someone who has been grounded from 17 in biology, who has watched and learned from an expert from 21, and who isn't really practicing medicine, surgery until they're in their late 20s, early 30s. So what you have in finance is we're thrown in, or you're thrown in, very soon after entering a big investment bank. You're made to specialize far too soon.
Yeah.
Imagine a heart surgeon. A heart surgeon doesn't study heart surgery to begin with. They study medicine and they understand human anatomy in its entirety. And then they begin to specialize after maybe 10 years. In commercial finance, you don't have that route to becoming an expert.
Yeah.
And that hasn't improved.
Yeah.
This industry is only as good as the market participants. And the sad truth is that the quality of recruits has deteriorated, not improved, in my 30 years.
Really? That must have a big impact then, obviously, on the clients who trust the investment world to manage their money. When it comes time to understanding very complex and increasingly interconnected issues like the rise of China, maybe, or the fall of other parts of the world, and how that impacts markets, how that impacts industry. Naturally, in this podcast, we speak to those who have the most experience, like yourself. So when you look at the landscape of how China has risen over the decades, you have a point of view that says that its rise is unstoppable and the West can't really do anything about it. Am I right in saying that in the first place? And could you just put more meat on the bone with that assumption and what that really means for even Western financial institutions and asset managers and their level of development and growth, especially as China grows and becomes a very dominant power in the future?
Well, that's a very good question. Let's think about China.
Mm-hmm.
China didn't exist in any meaningful way before 2002. So it's 19 years old. It's a teenager still, because it joined the World Trade Organization on the, I think it was the 11th of December 2001. So really, it only came to the fore in the early months of 2002. Its currency was pegged to the dollar until 2005. Since then, its currency has, broadly speaking, been strengthening, but it has still been held back by Beijing, because Beijing is still doing what we saw with West Germany after World War II in Japan, which is trying to remain competitive. The issue is this, is that the People's Bank of China, the SAFE, which is effectively the sovereign wealth fund of China, has learnt all the mistakes that Japan performed when it was the Asian superpower economically. I've been watching China for 19 years, waiting for it to make a mistake, waiting for Beijing to make a microeconomic mistake. And I'm still waiting. It dealt with the 2008 crisis. The 2008 crisis has been described as the GFC, which some call the Great Financial Crisis. It wasn't global. It was purely North Atlantic. It was a crisis that struck the US, a crisis that struck Europe, and a crisis that struck the North Atlantic that the Eastern Hemisphere had to deal with. It wasn't caused in the Eastern Hemisphere. If you go back to 1997 with the Asian currency crisis, that was an Eastern phenomenon.
Yeah.
But the GFC was entirely North Atlantic, and Beijing dealt with that perfectly. And it's dealing with COVID perfectly. What we're seeing is the Federal Reserve in the US doing what it's traditionally done, which is deal with problems by printing money.
Mm-hmm.
In the past, it's not been a particular challenge because the world has no choice but to use the dollar as a numeraire for commodity prices, use the dollar as its store of wealth, use the dollar as where it saves. That train has gone, left the station.
Mm-hmm.
And we're seeing the epicenter of the global economy move eastwards. If you were to ask me my favorite English-speaking economy, it wouldn't necessarily be the UK, although the UK is fundamentally very strong in my view. Australia and Canada, because they have engagement with China. They have natural resources, they have the rule of law. They are as close to being the perfect emerging economy because they're emerging in as much as they have wonderful demographics. Now, what is my point? My point is that you use the word complicated. There's nothing complicated about what we do if you understand the fundamentals. And it's the failure to understand fundamentals that I find frustrating, because the universities that are producing the recruits into finance are giving them degrees in subjects that aren't relevant. Now, how will that change? I was hoping that the 2008 crisis would see a complete revaluation of who should be allowed into the cockpit. Think about, again, I used medicine a moment ago. If someone walked into a cockpit of an airplane without any understanding of how the thing worked, they'd be arrested.
Yeah.
And yet you're seeing young men and women coming into finance, being given responsibilities that they're not fit for purpose for. Airplanes crash
Yeah.
99.999% of the time because of pilot error. Commercial banking, commercial finance is fundamentally robust. What brings down institutions is pilot error.
Yeah.
And we still allow untrained pilots into the cockpits of finance. And that is, for me, an incredible frustration.
I can imagine it would be, especially when you as a market participant are expecting the same level of responsibility, insight, and lateral thinking as you're providing yourself to be reflected in the market, but that's not always the case. Taking it back to China, what would you say to the critics who say that naturally, politically, China is very different to the global West? Their ambitions have been hidden for a long time in what they actually want to do, and that is being a dominant power, or the dominant power in the world, to overtake the USA militarily, economically, with industry as well. And a lot of information coming out of China is very unreliable, whether it's their GDP figures, their development figures, their business growth figures, or even when they produce reverse mergers into US markets. A lot of Western and US accounting can't be applied to China because the Chinese government don't allow full audits of their accounts by Western institutions, which makes it very.
Can I interrupt for a second?
Yeah.
I saw the evolution of national accounts coming from Greece, from Italy, from Ireland, from Spain, from Iceland. Accounts that were given AAA ratings from S&P and Moody's and Fitch. We now know they were fiction. So Europe was producing the same sovereign accounting pretense that you're claiming comes from China. I've seen corporate failure after corporate failure after corporate failure in North America and Europe. Where was Enron Chinese? Was Global Crossing Chinese? Was Wirecard Chinese? I could go on, which I continue. So this perception that everything from China is fiction and fraud is absurd. As for its ambitions militarily, China has one ambition, and that's monetary, not military. It can take over the world monetarily. So why waste sending soldiers in? Let's not forget that since 2002, China has earned in excess of $5 trillion of trade surpluses. And of those $5 trillion, it still has over 3 trillion in reserve. It spent 2 trillion. It has acquired Africa monetarily. It has acquired South America monetarily. It has acquired Central Asia monetarily. It's acquired the UK monetarily.
Yeah.
No need to send soldiers.
Yeah.
What contribution has China made or Beijing made in the war in Syria in any meaningful way? Or Yemen? None. Or Iraq?
Yeah.
So this the barraging of Beijing with the claim that it has ambitions that are nefarious is not consistent with the facts. And all I deal with the facts rather than speculation. What's happening with China is that because China has an engagement with Iran, anyone who doesn't like Iran is throwing brickbats at China. So it's like, know the narrative. Our job in finance is to be clinical, not to be duped. If anyone thinks that China has some sort of insidious role in the world, my only response is, if China isn't growing as strong as it is, there is no other part of the world that can provide global economic momentum. Europe is rubbish. North America or the US is flawed. India is still poorly managed. In fact, I often hear, why can't China be more like India and democratic? Where's the democracy in India? And as for China's ambitions, those who are old enough, as I am, to remember the Tiananmen Square riots, the
Yeah.
near collapse of the Chinese Communist Party. The reason the Chinese Communist Party has one ambition, which is sustained, robust growth, is because Beijing knows that the best pacifier to your population is wealth creation. China has a middle class which is growing as quickly as the population of Europe every year, faster in fact. There are 500, there are 500 million Europeans. There are 500 million middle class Chinese, and that number's growing. So there's Europeans like me and you, or those of us who live in the Western Hemisphere, have got to appreciate that our day has passed. The role of global leader is now is in the Eastern Hemisphere,
Mm-hmm.
and
So
we're not the master, we're the servant to the East.
what would you say to those, though, who say that, okay, let's say China is becoming, and as we can see, financially at least, a very influential and soon to be dominant power in terms of growth rates and production rates as related to the US. What does that mean tangibly for things like the rule of law? What does that mean for things like the idea of, again, these topics which I'm about to mention may play in the minds of investors to a certain extent, but this is more for a political audience or a military audience for the issues in relation to their human rights record. And should we be doing business with a country that has stated many things which aren't facts in their country? And how about the military and the intelligence heads of the US government, who have shown time and time again in their own reports that China's ambitions, being number one, comes with responsibility of being that number one, and China will not provide the same level as global leadership, if you like, to the world as the US has done. And actually, coming from a US mouth, then they'll obviously try to promote the virtues of the US as opposed to the vices of China. Is there anything in the minds of investors that pay attention to these assertions by the defense, military, intelligence communities of America and the global West, and the very fact that with the rise of China, we see in terms of even legislation, whether it be the FIRMA piece of legislation in the US, where it limits Chinese inbound investment for industries which are deemed national security interests, or even within the UK, there's a bill that's going through the UK parliaments now, which has the right to do even more due diligence checks on investments, inbound investments from China, targeting China specifically. These aren't done for any other reason in the mind of the US, because China's ambitions are nefarious and they have an intention to be number one. And with that power comes a lot of negativity. What would you say to that?
I'd say that is a narrative which is coming through the prism of Washington.
Yeah.
Okay. I've got no agenda. I don't care about the nature of the individual countries. I look at them indiscriminately.
Mm-hmm.
If you're asking me between the US and China, who has been a global destabilizer over the last 20 years, I don't see the fingerprints of China in Libya or in Syria or Iraq or Afghanistan. I don't see their fingerprints the way I can see the fingerprints of Washington. I don't see the Chinese renditioning or waterboarding any more than Washington has been proven to have done.
Mm-hmm.
The US is very closely linked to Saudi Arabia, whose human rights record, as we speak today, is being challenged. The US is linked to the UAE, whose human rights record is today being challenged, finally, after long being ignored.
Yeah.
Again, I don't like hypocrisy. You can accuse China of many things justifiably, but if you're going to cast the same measurement over China that you're doing, then you should use. If you're going to basically measure China in one way, measure the US and Saudi Arabia and the UAE, Pakistan. Look at in Poland as we speak, a country in the European Union. If you're if you're transgender or lesbian, if you're young and you want an abortion, your liberties are being curtailed. Okay, in Hungary, more and more European nations are moving towards nationalist agendas.
Mm-hmm.
Okay, so this idea that somehow China is I said it first and you repeated, nefarious. There's nothing overly nefarious about in China than there is elsewhere. Countries are self-interested.
Naturally.
And my final point on this subject, on this question is this, is that if the UK, which I doubt it will, if the UK pushes back against Chinese investment, if the Americans, as they will, push back against it, I would remind you of the word monopsonist. China is the only buyer in town. If you don't sell to them, there's no one coming to buy from you instead of them. Because let's not forget, the developed world has run out of money fiscally.
Mm-hmm.
The emerging world gets its money from China, factually.
Yeah.
So if I'm not a mouthpiece for Beijing, I'm simply a very, very good macroeconomist and a very good microeconomist, and I'm a realist. They're the only game in town.
Yeah, for sure. Do you say, from your perspective, is there much consensus on the way that you see the things, and compared to your colleagues, perhaps investment colleagues in America and in Europe, and even perhaps in China or in Asia, the perspective that you hold, do you think it comes from the fact that you don't come from an American perspective? You're living in the UK, which is sort of a go-between Europe and the US, and your mentality is built by the political climate in the UK, as opposed to if you're an American investor, with these sentiments played to you there?
I'm colorblind. I'm nation blind. My only dogma is economics. Maybe for the purpose of this answer, let me tell you, I at 17 I went to the London School of Economics. I found that I was lucky enough that I began a degree that I fell in love with. I did my master's there. I did my PhD there. I wrote papers there. I lectured and taught around the world, as in the UK and beyond. I've done nothing other than economics since I was 17. I'm 55 years old now. Okay, I can't play golf. I can't play chess. I can't play the piano or play the cello. This is what I do. So I don't let anyone tell me what to think about economics. I can create my views through first principles.
Yeah.
It's not because I live in the UK. It's because I understand economics and I'm a realist. There are things unfolding in the world that are that are fascinating.
Mm-hmm.
We're talking about China and the US. There's a place called Hong Kong, 11 million people. It's a self-administered region of China, and yet it has the US dollar as its peg.
Mm-hmm.
It's been pegged to the US dollar for all my career and before, in fact. That peg cannot last, because as the Chinese currency continues to strengthen against the US dollar, then Hong Kong will find itself mispriced. It will become very cheap for Chinese mainland buyers. It will become cheap for its real estate. It will become cheap for its malls and shopping centers. At some point, the Hong Kong Monetary Authority will have to break the peg with the US dollar. That will be a momentous event. Now, you might think, do we have a precedent for that? We do, because the Hong Kong dollar is pegged to the US dollar, having been pegged to the UK pound.
Yeah.
So currencies have their moment of glory.
Yeah.
And it just happens that we are seeing the last hurrah of the US dollar as the monopoly global currency for commodity pricing, for global savings. The fact that Bitcoin is rising has as much to do with the fact that it's priced against in dollars as it having any virtue. Bitcoin has no virtue. The problem is that the euro, the yen, the dollar have no lovers. In the case of the yen, the dollar, and the euro, it's an ugly contest.
Yeah.
Who's the least ugly? The good news is that you've got this new raft of currencies as I mentioned, the Canadian dollar, the Australian dollar, the Chinese currency, the RMB, they're going to come increasingly into the fore as stores of wealth. And as they do, if you're Australian or Canadian or Chinese, as your currency lifts, so will your household wealth, so will your business wealth, and your ability to buy the rest of the world increases. And as the dollar goes down, American purchasing power goes down. These are not theoretical predictions. These are factual events.
Factual realities that you see happening on a day-to-day basis. Naturally.
Sorry?
These are factual things that you see happening on a day-to-day basis. So there's no need to frame it in any way, because you can see the numbers, you can see things happening for yourself and build an opinion off the back of these fundamentals.
You can see if you're looking for it. Too many young men and women, and I'll keep saying young men and women because anyone who's in their 20s or 30s hasn't got the experience yet. They're so busy looking at cryptocurrencies.
Yeah, let's talk about that.
And looking at indices and technicals. An index, the S&P 100, the Dow Jones, the CAC, the DAX, the FTSE, the Nikkei, they're not abstract. They represent a collection of companies. I often ask students, I say to them, tell me, just give me 10 names in the S&P 100. Give me 10 names in the Nikkei. Give me 10 names in the IBX or the IEX or the AEX. And they've got no idea.
Yeah.
I say to them, give me some currencies in the Eurozone. And they go, Poland, Ukraine. These should be fundamental knowledge points. I say, what is the currency of Brazil compared to Argentina? What are the interest rates? No idea. What is the currency of South Korea versus Taiwan? No idea. Which currencies are tied to the dollar as pegs? No idea.
Yeah.
Surely these are fundamental pieces of knowledge that you can't come into finance not knowing.
Yeah.
Because you can't. There isn't a single asset class, equities, bonds, property, which don't involve currencies. So if you haven't got an overarching knowledge of currencies, how can you possibly be confident in your bond or equity or property portfolio construction?
Yeah. Yeah.
Now, if I seem annoyed and angry, it's because it doesn't take a great deal of effort to learn the answers to all those questions.
Naturally.
It doesn't. And yet, I'm told when I suggest that they should understand these things, they say, "Is it relevant?" What a ridiculous answer. Is it relevant? Of course it's relevant. It's profoundly relevant.
Of course. So then, do you get nervous, or I think nervous would be the right word for younger investors who have access to the markets through zero commission trading, and they simply put their money on a company which is the most well known, that the media is shouting most about. They put whatever investments or savings or whatever in that, and they just ride the wave hoping for it to go up without understanding the fundamentals, using obviously GameStop and the rise of Tesla over the last year as examples, without understanding the fundamentals at all. This is being compounded globally with more market participants, at least retail market participants from all over the world, which are seeing a rise in their income through furlough schemes or through them just working themselves. And they're just putting their money into these stocks without understanding, which is affecting the markets in many different ways. What would you, naturally you'd say to them, understand the fundamentals first, but is this having at all any structural impact on market dynamics? And do you see them having a bigger impact as more retail investors come into the fold?
I have to basically remind you that I've been doing this for 30 years commercially. So I've seen this horse race before. In the 1990s, you had the TMT boom, the telecom media technology boom. So very much the same phenomenon, momentum-driven, meteoric rising of blue sky earnings. Companies had no earnings, but we were told by investment banks, the investment banks were parading these companies saying they may not have earnings today or tomorrow, next year, but when they do have earnings, there'll be blue sky.
Yeah.
I can't give you a number because it'll be so far in the orbit. As we know, 2000 happened and you had a crash. Now, if everyone in finance was old enough to remember that and working, then there wouldn't be another. The problem is so many investors are so young that they weren't
around to experience this.
In the 90s.
Yeah, they weren't around.
Born. So,
Yeah.
and their view is don't use the past because it's the paradigm shift. This is the new normal.
Yeah.
Things are different this time.
Yeah.
And guess what?
They're
Back in
not.
the 1990s, when I was in my late 20s, and I said to the people who are more experienced, who are warning me about the spectacular rise of the e-commerce stocks, BATMs and Marconi and so on.
Mm-hmm.
I said, but it's different this time. You need to be burned. You need to carry the scars.
Yeah.
And there'll be scars from this episode,
Sure.
and there'll be survivors, but there'll be far more corpses.
Yeah.
Figuratively, of course, not literally.
Yeah.
But you need this. You need these episodes continue. It's a gold rush phenomenon. I often, when I'm asked to recommend readings for students, I say there's one book you should read,
Mm-hmm.
which is by a guy called Charles Mackay, and the title is Extraordinary Popular Delusions and the Madness of Crowds.
Yeah.
And it chronicles bubbles. Now,
Yeah.
what makes this book so extraordinary is it was published in 1841, and it's this thick.
Yeah.
Okay. So in 1841, someone was writing about the history of bubbles.
Sure.
Since then, we've had a book this big added to it. We are human and we're susceptible. The job of professionals is to basically protect their clients and preserve their capital, not to be drawn into these fads. When you're not making money when everyone else is, you're accused of being a dinosaur.
Yeah.
When you've preserved your capital, as everyone has basically blown theirs up, you have the last laugh.
Yeah. Do you think there's any justification to say that maybe this time it is slightly different in terms of the rise of, because your views on Bitcoin have been mentioned in the past, whether it be on the media or whether it be writings, I'm guessing also, but I've definitely seen you speak about this before. Is there any fundamental way in which you can say that the concept of Bitcoin can be useful or is of value? Because as a store of value, it's only valuable from many people's perspective if you believe you can sell it to someone else for a higher price. There's no fundamental. It doesn't produce anything. It's a non-productive asset, essentially. But then you do but you do see some very reputable, a lot of billionaires, especially in America, who promote the virtues of Bitcoin. Naturally, blockchain has its own fundamental uses, but fundamentally, Bitcoin as not only a store of value, but as a maybe not a replacement to the dollar, but it will play some sort of role in the world of currencies in the future.
You're not giving me a question. You're giving me an answer framed in a question. There is nothing fundamental about Bitcoin. It will one day be in a book about bubbles, the way that Charles Mackay chronicled in 1841. I don't doubt that. It's factual. There is no way you can. It's a bit like you mentioned blockchain. Bitcoin is not blockchain.
No, definitely not.
No one, in the same way, no one owns the internet. If I have a website, that gives me no ownership of the internet. I use the internet effectively from my website, but I have no vested ownership.
Mm-hmm.
And similarly, if I own Bitcoin, I don't own the blockchain that creates Bitcoin.
Naturally,
if you overlay onto that the fact that Bitcoin is now in the crosshairs of the ESG community because it's not particularly climate friendly, because the more Bitcoin you produce, the more energy you consume and the more gigawatts you need.
Yeah.
So finally, we're starting to see the conflict between the modernists who claim Bitcoin is fantastic, the modernists who want to see greater ESG in conflict.
Yeah.
It's a car crash. And I'm not going to base. Some of the listeners may remember that along with a professor of economics at the LSE, we wrote a very short letter to the FT that we valued Bitcoin back in 2016, 17 at about $200. Okay. Now, I would not revise that. Oscar Wilde once said famously in a picture of Dorian Gray, I think it was,
Yeah.
confusing the value and the price of something.
Yeah.
I can't challenge the price of Bitcoin, but I can challenge what its value is.
Yeah.
And its value is dramatically lower
Mm-hmm.
than its price. And gravity will work. Don't ask me when, because I can't answer that question.
Mm-hmm.
But it will happen.
Yeah. Do you
And when
see
it does, it will
Yeah.
basically, sadly, bring down many, many small investors who have been sucked in by snake oil salesmen, by boiler room salesmen. The Wolf of Wall Street is a terrible indictment of finance. I've seen young men and women watching the Wolf of Wall Street and applauding it. It's terrible. Boiler rooms and snake oil and pressure selling is not what we need, because the victim is the small town investor, the dentist, the doctor, the architect, the hardworking nurse, teacher, who can't afford to lose $40,000 of their savings on Tesla or Bitcoin or Ethereum or GameStop.
Yeah.
And they will happen. And the big guys, the brokers, walk away with that money. It should be criminal.
But then the role of regulators in this must be critical in making sure that they see, from your perspective, what Bitcoin really is and stamp it out, in your perspective, as fast as possible. Naturally, regulators move quite slowly in this. What role if you were the head of the FCA, what would you do in regulating this more so than what they've done already?
The problem is that Bitcoin falls between regulatory environments. No regulator wants to claim ownership over their regulation. They're saying, that's not my problem. It's been allowed to therefore grow almost into a regulatory vacuum.
Yeah.
Because nobody wants to be the red flagger. Look, regulators, sadly, indeed, rating agencies as well, have been missing at the front many, many times.
Mm-hmm.
They hide, and you can ask me why they hide, and I'll give you candid answers. But they're not there, and they're missing at the most important point here. But to repeat, this is nothing new.
Yeah,
the names are different, Bitcoin and Tesla and GameStop.
Yeah,
But you could go back to the over the years, certainly my career, and I could give you as many names.
Yeah,
I saw Enron, Global Crossing.
From tulip bulbs back in the day to now, to many different aspects.
In the late 1990s, you had all this sort of blue sky stuff.
Mm-hmm.
Accounting fraud is sadly look at Wirecard in Germany, as I mentioned earlier on.
Yeah, Enron back in the day as well. Yeah, all of them.
And it's Tyco.
Yeah.
The I can't speak for other people, but if it's between the market consensus and the economics that I know, I'll always back the economics.
Yeah.
I'm not in this industry to be liked. I will have arguments with other market professionals and tell them I don't trust them, and they'll be offended. I don't care. It's not my problem.
That's a good approach to take. The last point I'm going to mention about this, and then we'll move on to the Eurozone, because that's an area that we have to cover too. In terms of thinking about things like Bitcoin, naturally there's a big hype towards it because it's shiny, it's new, it's technological. Regulators aren't doing the best they can in making sure that they stamp it out, because no one wants to have that big of a problem on it. Especially it's going to be a big PR thing as well, saying the big regulators aren't allowing change to happen, and they're thinking about these things too. If you are an investor who may be younger, who may be thinking about investing their money into this, what do you say then to the big banks who have already invested in Bitcoin when they see big names putting their money behind Bitcoin. And to what you're saying, how can they shape their opinions when they're seeing, your colleagues in some cases in these institutions doing?
Give me name them. So first of all, you asked the question that you began was about the Eurozone.
Yeah.
And then, but you can't help yourself. You're fixated with Bitcoin.
Exactly.
It has already taken up too much of our time. It's not shiny. If you want shiny, buy gold. Gold's been around since prehistory, yes?
Yes, 100%.
At least it has a reputational tradition. Okay, I can't wear a Bitcoin around my neck. I can wear gold. I can melt it. I can use it for tax evasion.
Yeah.
Okay. The idea that somehow, if you're telling me that Bitcoin will become institutionalized, then quite frankly, you risk being institutionalized.
Mm-hmm. For sure. That's a good point to mention. So moving to the last point of our conversation, meaning the Eurozone. When you see what's happening right now, especially after Brexit, give me your assessment of where the Eurozone is going, especially given the fractious nature of what Brexit has done to Europe, I guess, in general, and also with the extension of new this is a lot to put into one question, but you have the phenomenon of Brexit. You also have the phenomenon of even Balkan nations who want to join the EU. What is your assessment of how Eurozone leaders are coping with such changes in the world, and what do you think they can do better in maintaining some sort of security and stability for the people who live in these areas, so that they are more prosperous today than they were yesterday, or more prosperous tomorrow as they are today?
Well, let's because there's a number of
There's many questions there. Yes. Yeah.
The European Union has 27 members. There are a number of accession states that want to come in. You mentioned the Balkan states. They won't join. They can't join. Because the Eurozone within the European Union has 19 countries. And of those 19 countries, Spain, Portugal, Italy, and Greece have been fundamentally hurt by COVID in a way that made a bad situation worse.
Mm-hmm.
So the EU capital that exists will have to be focused on repairing the damage caused to the Southern European Eurozone nations.
Mm-hmm.
There isn't going to be enough money to do that, and also to fund in the way that you saw the funding of Romania, Bulgaria, and Poland in the enlargement phases of 2004 and 2008.
Mm-hmm.
So no more arrivals to the European Union. No one's leaving the Eurozone.
Ever? Or until they have enough money to do so?
What you're going to see going forward is no one can afford to leave the Eurozone. No one can. If you ask me why that's the case, I'll say, well, give me a name of a nation that can leave the Eurozone without there being damage internally. I mean, if you suggest Greece could never leave the Eurozone,
no,
because if it went back to a drachma, it would become Zimbabwe. The Northern European states, if they had their own currency, essentially would see their currency even stronger against Southern. It would be effectively a case of an appreciation they couldn't afford.
Mm-hmm.
In terms of the European Union itself, we're seeing, as I mentioned, the likes of Hungary
Mm-hmm.
and Poland
Mm-hmm.
and Finland increasingly returning parties that are less federalist than the ones they replaced, more nationalist. So the European Union will survive in a much less federalist way than it currently is, because it's failed.
Mm-hmm.
And I'm not saying that as a Brexiteer. The reason I'm a Brexiteer isn't because I'm some sort of narrow-minded little Englander. My family are Greek and Greek Cypriot.
Yeah.
The reason I was a Brexiteer was I understand economics.
Mm-hmm.
And the net present discounted value from the UK staying in the European Union was less than the net present discounted value of it leaving. I believed that back in 2016, and I believe it even more in 2021.
Mm-hmm.
Now, here's the problem. Putting that aside, here is the fundamental problem for the Eurozone. Its currency.
Mm-hmm.
Its currency will go down against the pound, which it needs. The problem with the euro, it's currently 121 against the dollar. it will move to 130. The euro will move stronger and stronger and stronger, ever less competitively against the dollar and the yen, because China will begin to rebalance China has a currency management system which is multi-national. It no longer manages against the dollar strictly. It manages against 16 other currencies, of which the euro is the second biggest weighting. So as the Chinese push their currency up against the dollar, they're going to push more and more of their dollars into euros, pushing the euro. What happens to Germany and Holland? What happens to Belgium and the industrial mercantilists in the north as they become less competitive? What happens to Sweden, which has its own currency, and Denmark? I wouldn't be surprised if between now and the end of the year, Turkey devalues its currency. So not only does the Eurozone face a devaluation, a competitive appreciation against the dollar, the euro becomes even less competitive against Turkey, which means the Southern Europeans who compete with Turkey for tourism and for basic foodstuffs are hit. The Eurozone then gets caught in a vice where the euro is getting stronger and stronger. It's the dollar and the Turkish lira, the Egyptian pound. The only respite the euro gets is going down against the pound. Now, these are simple macroeconomic FX forecasts and predictions based on covered rate parity, interest rate differentials, inflation differentials. I don't meet many students who even care about these things. And yet you can't have a portfolio of stocks or bonds or properties
without knowing these things.
Without knowing that these will be impacted by these movements in currencies. Yeah. And yet it's almost dismissed.
Do you see yourself, Sav, in the future maybe wanting to work in policy where you shape the policies of these regions, maybe even looking into politics into the future, where you can have some primary impact into the macrofinance of the world or of a specific country, or do you see yourself playing in this field as a chief economist for the rest of your time?
Do I strike you as a diplomat?
Well, you could be a very cutthroat one, but I think you could be a good one. Why not?
You're very kind. No, the problem is, I have enormous respect for Mario Draghi. I think he controlled the ECB at a very difficult time. Italy is lucky to have him as prime minister. I have no respect for his successor. I think Lagarde is a diplomat, a technocrat. So the ECB is in the hands of someone who is unfit for its demanding purpose. In the US, Janet Yellen left the FOMC. She's now Treasury Secretary.
Yeah.
I think Powell has an impossible job because the US is now printing dollars. I think the UK is very lucky. It's got a good Bank of England, it's got a very good Chancellor. But most importantly, to repeat, now my job isn't to fashion policy. I wouldn't want to do it. My job is to have a panoramic view of the world, taking in every geography, north and south, east and west, and looking at it purely economically, with no subjective or no filter. And to repeat a point that we opened with, the only game in town is China. And it's not malevolent. Its ambitions are purely to keep its middle class and its working class pacified, getting wealthier and wealthier, consuming more and more, so that the Chinese Communist Party can survive as long as it can.
And as we wrap this up, Sav, as we wrap this up, what would be your final thoughts because this podcast goes out to chief investment officers, it goes out to economists, it goes out to policymakers, it goes out to even concerned citizens. That's the kind of demographic that we have here. From your 30 years of experience in the industry, what would be some of the takeaways that you would wish those in the industry would think about more so, or have a sharper perspective on? What would be the last words that you would say to them so that they have a much more perhaps realistic or fundamental perspective on the world and don't get attached onto the headlines and onto narratives that other players who are not in the investment world try to feed them?
Well, I'd say A and E. So what do I mean by always bear in mind the A and the E? The A is agenda.
Mm-hmm.
Is the person speaking to you agenda biased?
Mm-hmm.
And the E is, does the person who's talking to you have the education and the experience
Mm-hmm.
to be listened to? Because a great many of the talking heads that you hear on the news, in the screens, or read in the newspapers have agenda biases. They'll tell you something that they want you to believe because it serves their self-interest.
Yeah.
And there are other groups, often the same group, but there are other groups, they're not mutually exclusive, who speak from a purely uninformed position. Purely uninformed.
Mm-hmm.
They have neither the education or the experience. But what we do have is the confidence. Okay. So that will be my takeaway. Just always be skeptical
Mm-hmm.
of received wisdom. And don't be frightened about being non-consensual. Because
Yeah, kind of circles back to the first point. Yeah. Circles back to the first point.
I'm lucky enough. The consensus is non-rewarding.
Mm-hmm.
There's no alpha there. The alpha exists knowing that the consensus is wrong and having the ability to actually invest against it with some hedging, with some option investment to avoid being sort of made illiquid or insolvent, waiting for you to be proven correct.
Yeah, wonderful. And if people want to get the last question, if people want to get into contact with you, Sav, are you open to contact? I mean, you're on LinkedIn. Have you got a Twitter account? What's the best way for people to get in contact with you if they want to hear more from you?
Look. I don't do social media. LinkedIn is my way of effectively. My LinkedIn posts are purely economic.
Mm-hmm.
There's no emotion, simply substance.
Mm-hmm.
I'm always available. I've never walked away from an argument, a confrontation, a fight. But one thing I'd say that you don't want to fight with me about economics.
So setting warning shots to anyone who wants to.
Only one person walks out of that ring standing up.
Good to know. Good to know. Wonderful. So Savvas, thank you so much for your time today. This is going to go out soon, and thank you also for everyone listening, and catch us on the next episode coming out soon. Thank you so much, and bye-bye.